The Troika have been trying to reach a deal on Cyprus for more than a year now, the Troika being the European Commission, the European Central Bank and the IMF. So in the narrow sense that they've now finally reached some kind of a settlement, the 10 billion is now actually on the table and Cyprus has, in theory anyway, agreed to it. Then I guess you could count this as a success, and certainly the markets seem to be breathing a little bit of a sigh of relief. But you only have to think about this deal for really a few minutes to realise that this is no kind of a solution at all, not for Cyprus and not for the wider Eurozone. For Cyprus, it essentially means the end of their banking model of business and economic advancement. This has underpinned economic growth in Cyprus for a long time now. For Cyprus, this is a total disaster as far as I can see. For the Eurozone too, what's proposed crosses a line, because never before in this crisis has the Eurozone required that depositors, ordinary depositors, whether they're big or small is irrelevant in this particular instance, depositors, are bailed into the rescue. So they're going to lose a lot of their money. That's not happened before in any of these bailouts. The larger ones are going to lose anything up to 40%. This is in a monetary union where they're meant to be establishing a banking union where all banks are treated in the same way. This is a total disaster because it obviously sets a precedent. Other countries which are in a weak economic situation, depositors in those countries are going to fear for their deposits and their money. So it's a disaster on that level. It's also a disaster because in order to sort of cope with the aftermath of this haircut, plainly if you're a depositor in Cyprus at the moment, you're going to want to get your money out very fast. So they're going to have to impose capital controls to stop that flight of capital. Either that or the European Central Bank is going to have to come in with huge amounts of liquidity to support the withdrawals that take place. If they impose capital controls, you might as well say, as far as Cyprus is concerned, it is the end of the euro. You know, a monetary union depends vitally on the free flow of capital from one area to another. Once you interrupt that, it ceases to be a proper monetary union. So on a number of levels, a line and a precedent has been set which is deeply worrying for the future of the Eurozone.